This is Ali Hussein Kassim of Ali Talks Tech. Today, I have the absolute pleasure to have a conversation with Aboyeji. He is the founding CEO of Future Africa, which is a VC focused on a Pan-African startup audience. But Aboyeji has also been a co-founder of Flutterwave, which is the leading fintech in Africa today, and also Andela. So a couple of very, very interesting hats that Aboyeji has won. So it's a pleasure, Aboyeji, to have you here today. So we'll just basically kick off and talk about your story. So what's your story, Aboyeji? What are you up to now? What's your journey been like? And what's the future looking like?
Yeah, I mean, this year would be about 10 years since I got back to the continent. And approximately now this would be maybe 14 years since I've been in tech. And really what it was for me, I was just really privileged, to be honest. I had the good fortune of just being in the right place at the right time, too many times to count. I don't know if you're a Christian, you will call it grace, but it is.
As a Muslim, we also call it grace.
Fantastic. So, I feel like it's all just divine, the journey. And there's no way anybody can take credit for a lot of what has happened, except that, one just happened to be well-positioned, divinely positioned for certain things. I grew up in Yaba, so I'm unlike many people who claim Yaba as just like a tech hub. That is actually where I grew up.
You grew up in Yaba.
I grew up in Yaba. Yaba Valley. So it's like when people say they grew up in Silicon Valley. I grew up in Yaba. I went to school there. I went to church there. I lived on the other side of town. So the side of town is also nice. It's closer to Shomolu. Those people that know Yaba well, there's Yaba stretches from the foot of the bridge in Alagomeji, Ebutemeta, all the way to behind the university, which is Akoka, Bariga, Shomolu side. So I kind of progressively made my way to the front of the line, if you know what I mean. So
yes, I do. I do.
I was born there. I grew up there. I had my parents made a significant decision early in my life, which was that they would invest deeply in our education. And honestly,
how many were you
that
as
made
kids?
A big difference. So we're four of us.
Okay.
And I have an elder brother. I've got a younger brother and a younger sister. So my parents made a decision to invest deeply in their education. So, I didn't understand how deeply until maybe I grew up. When it suddenly dawned on me, like, why was I in school with my dad's MD when he wasn't even the manager? With the daughter of my dad's MD when he wasn't the manager,
Whoa,
like it's literally like, oh wow, okay, he like really went above and beyond. Yeah, incredible sacrifice. But that meant that I was exposed to quite a bit for people of my age and class very, very early, including computers. My dad bought us computers at home because we needed them in school. And all of that. But, I didn't even expect, I finished primary school, went to secondary school, went to some of the best schools in the country. Didn't even realize anything about technology. I didn't think technology was something that Black people did. You understand what I'm saying? We're doctors, lawyers.
How old were you then?
Engineers, nobody. Those are the options. So, I mean, at 15, I was talking nano engineering. That was my future.
Wow.
I had the significant shift though from science to arts. At first my dad was really pushing me in engineering and science. Eventually I loved government and history more than I loved engineering and physics and chemistry, physics and all that. So when it was time to take my final exams, ultimately I opted for government history, economics, all that stuff. My plan was to become a competition lawyer. So I went, I again, pure providence. My dad was making an investment for my elder brother to go abroad. The school offered him a discount, and then he decided to give me that.
Wow.
That enabled me to go to school in Canada. I ended up at University of Waterloo, which again was because they offered a program that allowed you to work while you went to school.
While you went to
most other
school.
Schools did. Yeah, while most other
Otherwise,
schools did.
you wouldn't have made it.
Otherwise, it would just mathematically.
It was not going to be possible.
It was not going to be possible. So, I mean, so you can see how many things. But the other thing I picked up from Waterloo was also this entrepreneurial bug, right? At the time, and I think it's still the case, Waterloo had the largest free incubator in the world called Velocity. And a lot of very incredible entrepreneurs had come out of that program.
I didn't know that, Aboyeji.
Yeah. So people like Eric Mikogovsky, who invented Pebble. They were very early in YC. The founder of Instacart, Apurva, was also from Waterloo. And actually, the weird thing about Waterloo, there was this, people always talk about school dropouts in this, at that time, they talked about them in this reverential way. Before there was Mark Zuckerberg, there was Mike Lazaridis, who was the founder of BlackBerry. And he was such a towering figure for us at our campus because you had this incredible BlackBerry buildings next door to us, right?
Yeah.
And we were.
Yes. So we were at the BlackBerry founder.
Yes. So I was saying that, he had such a towering presence, but he was a dropout from University of Waterloo. So essentially, being in that kind of environment, you quickly realized that entrepreneurship and making technology was a viable path to prosperity and wealth. And that was something I thought about a lot. And that I had a friend, Pierre Aris. I met him on the first day of school randomly. But because we had cooperative terms that were opposite to each other, he would be on campus when I was off campus. So he went to Silicon Valley. One term, we happened to be on the same stream. That's what we used to call it, a stream. And I met him randomly I met him randomly in the
campus
cafeteria. And he just started telling me about everything that they had been doing in Silicon Valley. And I got really, really intrigued. So that was when, and then around the same time, Apple was giving BlackBerry a thrashing in the market.
Correct.
It was 2009, 2010. So that was, that was a backdrop for me getting into entrepreneurship. It was this brand new world where Mark Zuckerberg was building Facebook and, Apple was trashing BlackBerry. And
how old were you then?
I was, I was about 19, 20 at the time. So very, very early in my life. And I think watching that ecosystem evolve really played a big role in how I saw technology and technology ecosystems going forward from there, because I really recognized that there was something very powerful about entrepreneurial ecosystems, right? They had the ability to transform landscapes, transform lives. But anyway, fast forward, I came back to Nigeria.
Which year was this?
In 2013. July
2013.
July 5th, 2013 was when I came back.
Okay.
Then I was starting my second company. My first company hadn't done too well. And my belief was, maybe I'm solving problems for Canadians, and Canadians don't have many problems. You know what I mean? And so I thought, let me try and solve problems for my people that I know well. And I moved
back in Nigeria now.
Back to Nigeria. I tried to build a startup. The startup didn't quite work. And so I I next year I moved to Lagos. I thought maybe because at the time when I first came in, I was in Abuja. Then I moved to Lagos, the capital. Then I moved to Lagos in 2014. And that was when things really, really rocket shipped for us. So, because that was the year I started, I co-founded Andela, and from there the rest has been history.
The rest has been history.
For me, what I'm doing now, that was the question you asked. I'm spending a bit of time in Yaba. I'm spending a lot of time in Yaba actually, trying to go back to the ecosystem roots. And rebuild the entrepreneur ecosystem pretty much from the ground up. Because what had happened, I think, from 2018, 2019, when a little bit too much money started to come into the ecosystem, that, people started to believe money was the only thing that mattered.
Yeah.
And that hasn't been our experience.
We lost some vibe in terms of who we are and
the community.
How important it is as a community and to build businesses from scratch.
To build real businesses from scratch, So to build value, that's how I prefer to people put it. It's not just about businesses, but there was an ethos in 2013, 2014, 2015, 2016 even, where people really wanted to focus on value because there was no loose venture capital that would just be thrown at you for smiling.
Look, Aboyeji, I keep on saying this. When we started in this ecosystem in Nairobi's Ngong Road area, and we never raised any money.
Yeah.
In fact, the ethos was simple. Your best investment is a paying customer.
Exactly. Yeah.
So, I mean, that's not to say that venture capital doesn't have a role. It certainly has a role and a big role to play. But I think if we forget the fact that first and foremost we have to build to last sustainable businesses, then we get into a point where we are more raising money than building business.
Yeah, and I think we definitely got to that tipping point as an ecosystem, say in the last 3 years. But I think for me, it's even less. I mean, I'm a big fan of business, but I only got into technology because it had the power to change society, right?
That's correct.
That's one of the few things that I think has the power to change society. And I think for me, what we lost was more than just this ethos of building business. Because for some people, fundraising is a business, right? And they're paying customer as an investor. So
that is correct. That is correct.
But I think it's about, what are you doing to impact lives? Which is the one thing I would say, the class, I like to think about them in classes. The class of 2014, they really understood it. They really, really understood it. And I would even argue even some of the class of 2016, right? It was really about how do you build value. But by the time, we had a dip, we had a little bit of a boom up until maybe 2019. Then we experienced a dip during the pandemic.
I
think the biggest challenge we had was as the ecosystem scaled, the social infrastructure did not scale with it.
Expand on that. Explain that.
So
that is a profound statement you've just made.
Yeah. So you think about platforms like iHub, you think about CC Hub, which try their very best, but at the end of the day, the ecosystem scaled faster than their social infrastructure. You know what I mean? So
I get you.
I remember if we had issues, we would trash them out on the 6th floor of CC Hub.
Yes.
As an ecosystem, there were pitch nights. There was a place to go when you wanted to see the startup ecosystem, right? Mark Zuckerberg wanted to see the startup ecosystem. He didn't go to, Aso Rock first to look for us.
Yeah.
He came to Yaba.
He did. He
You know?
came to Yaba.
Yeah. So
And the same in
thing
Nairobi.
with same
He came
in Nairobi,
to-
right? He came to IHOP.
To Yaba. I have. Yeah, correct.
So what happened was, as companies scaled, they scaled apart from the ecosystem, right? Both physically and I don't know whether you say socially or spiritually.
Yeah. Would you say there was a case of not enough paying it forward?
Yeah. I mean, that's precisely the point I'm making, right? Like the social infrastructure, there were no norms. There were a lot of newcomers. There were no norms. A lot of people didn't make it a point of duty to institute some sort of culture around the engagement of being a startup. We didn't have time to build a culture, a startup culture. And so what happened with the incursion of money into the ecosystem is people just started making their own rules.
Yeah.
People
And to
started
some
making their own
extent,
rules.
forgetting where we came from.
I'm forgetting where we came from, right? I mean, I remember in those days, even up to 2017, at least up to 2015, once a month, we would all go to Afropolitan Vibes in Lagos.
Yes.
The whole ecosystem would be there, right?
Yeah.
When I was in Kenya,
Same in Nairobi.
It was the same thing. It was mirrored because
Yes.
with Andela, I had to go.
It was actually amazing how it was mirrored without even having conversation.
Exactly.
Yeah.
Exactly. But, by like 2015, 2016, some of the new entrants had come in. They wanted their own distinct cultures. People had started to show off. Social media was our primary mode of engagement.
Yeah.
Everything was about showing off how much money you had raised, flossing, So we lost culture. And then what completely killed everything was COVID. Because by COVID, there was an entirely new generation of people who came into the market that we've only met online.
Yeah.
So those ones had no rules, no obligations, nothing, no foundation, no mentorship.
The Gen Z of that time.
So by the time they came, they just scattered everything,
Yeah.
I remember then, if you wanted to be an angel investor, you at least had to visit IHOP and visit CCO. Now you could sit down anywhere in the world and wire money to an African startup without even ever meeting them.
Without even.
So that's why I mean.
And so there is this detachment.
Complete detachment.
Has happened.
The scene scaled faster than its social infrastructure.
I love this conversation, Aboyeji. I love that analogy. And so, how do we get it back? What are you building at Future Africa?
Yeah, so it's perfect timing because now with the funding crash, the sugar rush is over. Everybody's eyes have opened. We have this saying in Nairobi, and I'll translate it if you don't understand.
Yes. Vitu kwa ground ni different. So basically, it's a mix of Swahili and English. It simply means that whatever you do, things on the ground are different. Whatever you think up there in your ivory tower, when you come down to the streets, things are different.
Very
Prepare
different,
yourself.
Exactly. The Yoruba version would have sounded very similar. So that's how we're brothers. So so what I'm doing, I mean, the first step is how do you rebuild pipeline? Because what people are not realizing, we took the numbers of this crash and said, okay, what is really happening? A bunch of VCs got $1 billion plus in funds raised. And you see there's a funding crash. They have to deploy this capital. So what are they doing with the capital?
Yes.
The capital is going somewhere. So what we now realized was actually what we were calling a funding crash was angel investors had gone off the radar.
Wow.
So funding below $1 million, which is typically the terrain of pre-seed funds and angel investors and accelerators, had gone
just
from
dried up,
just completely gone 95% minus 95% completely. Okay. And actually, funding above 1 million, which is the range of the VCs and so on, was actually steady. It wasn't.
And
it didn't actually
growing.
decline. I don't know if it's growing. I think people are being a bit cautious, but it's steady. So, and what you notice is that anytime that happens, there's a 2-year lag. The Series A, the seed to Series A pipeline gets impacted because people are still investing in last season's deals, right? So in another 2 years, they're not going to find any new deal flow because the cycle takes time.
Due
right?
diligence, pipeline building, it takes time.
Yeah. And even the angels working with companies, right? Takes time, right? To be able to get to the milestone where they can raise from a proper VC firm.
Correct.
So here I was with my VC firm waiting for deal flow that didn't exist. So what I did was, I said, okay, you know what? I first of all started with a series of events. I just bring founders together once every month. Let's just sit down and talk. Right?
Wow.
And then from that, we evolved it into, we've had a pre-accelerator program, and our pre-accelerator program's principle was, look, we don't have the resources for an accelerator. Let's prepare you to go to the companies, the platforms that have those resources. So, YC, Techstars. We had a pretty good success rate, about 25% of pre-accelerator, right? So we had about 25% of our companies end up in either YC or Techstars. There were others, but those were the two preeminent ones.
I like that.
But anyway, when YC and
I love
Techstars,
the term pre-accelerator.
Yeah, that was what it was. Just pre-accelerator. So when YC and Techstars, after the market crash, they came back to us and said, look, Ian, the truth is we can't accept as many of your people, even if they're good, as we used to accept before, because the U.S. investors who we primarily serve are not interested. Right? They're looking increasingly local because that's what they know, and things are scary out there.
Yeah.
So, we had to now ask ourselves, okay, so do we just roll over and die? Or are we going to at least give this thing a little fight? What do we do? So we actually then graduated our pre-accelerator to a full accelerator. So twice a year, we gather 10 startups. It's called Accelerate. It's the simplest name in the world, Accelerate Africa.
Yeah.
So we take 2 cohorts a year of 10 companies each, and we just pull them
only
through.
10. So I 10. Like that number because that 10 is manageable.
Yeah.
You can give them the time it requires to actually help them to grow as businesses. I like that.
Yes. So we just do 10, and then we just try and help build that pipeline. And it really matches.
Which verticals do you focus? Which vertical?
So we put out something called a request for startups.
Okay.
We're agnostic, but we put out requests for startups. Like, for example, For example, this time we're really focused on innovations around cost of living, interest rates, and IoT. Fusing, atoms and bits. So we get creative about what we're looking for, right? The last time we were very big on like health, logistics, education, right? New and innovative approaches to health, logistics, education. So we innovate. We innovate every batch, but we don't restrict ourselves to that, right? It's really about the quality of startup. We're completely sector agnostic, but there are particular problems that we take specific interest in that we would look at twice.
That's very early stage.
Yes, we're looking at very early stage. We do like the companies to have launched because we feel like in these times, launching is a test of resourcefulness.
Yeah.
Yeah.
You have to have been there, some skin in the game.
You have to have some skin in the game. So we like them to have launched. But beyond that requirement, we're happy to take people at any stage.
Okay. Nice. So how many years has it been since Future Africa launched?
Well, Future Africa itself, it's been our investment vehicle for the last 9 years.
Okay.
So it's just evolved with the market,
I see.
In 2014, 2015, 2016, it focused a lot on being a venture builder, right?
Okay.
Even though it didn't call itself that, right? Because what I would do is, I would go into a company like Andela, right, as a co-founder with the infrastructure of Future Africa. At that time, it used to be called Street Capital.
Okay.
At that time. Same thing with Flutterwave, and we worked with a number of other companies as well in a similar fashion. But now, then it evolved into sort of more like an angel group sometime in 2020. So we used to pull together the Future Africa Collective, which was sort of our vehicle for engaging angel investors in the ecosystem, but in an appropriate way, right? Helping them understand the companies, meet the companies virtually, see the companies, invest in the companies. Now it's a venture fund, primarily. Future Africa is a venture fund. And Accelerate is an initiative under Future Africa, which is really geared towards just enabling these 10 companies twice a year.
Fund value, is this fund value? And
Yeah, we're roughly about, depending on whose valuation you use, it's very important. So we're sitting on roughly about $60 million in assets under management.
Okay.
That's deployed.
Okay.
And then we have, in terms of what we have in capital to deploy, we're sitting on roughly $15 million. And then...
And this is from several investors or? From several
investors. We have one very big investor in our current fund, but then most of the other investors, we have one anchor investor and then a bunch of other smaller investors and the institutional investors. I think one of the things we're really trying to do is even diversify the mix of investors. So typically everybody just thinks DFI or nothing, but we have, we have fund of funds which represent pension plans in the US. We have a global bank as one of our LPs. We have a lot of foundations as part of our LPs. So we have quite a number of different things like that.
Aboyeji, I have got to ask you this.
Yes.
What percentage, without mentioning any names, because I'm sure you have some confidentiality, what percentage of your funds is actually Africa?
Of people investing? LPs?
Of your fund,
no.
of your 50?
No. Of our 50. From the LP perspective, ironically, it's a little bit larger because the first fund, which was us, and we are African.
Yes.
Right? And that is
fantastic.
We still hold on to a lot of the assets.
So basically, the second fund, putting your mouth where your money is.
Yes, exactly. The second fund was 60% African. Second fund. Now, ironically, it is now that we're now having because the honest truth is that the anchor check didn't come from an African fund. But apart from that anchor check, I would say, roughly about 40 to 50% of the other checks are African.
Look, the reason why I'm asking this, it is something that is very close to my heart. And I'm always, whenever I have an opportunity, I have to talk about it. And I say that today, some of the biggest and probably most successful startups in Africa, unfortunately, are not owned by Africans anymore.
Oh, this is absolutely true. I built some of them, so I can tell you for free.
Yes. So
I can tell you for free.
I like to give an analogy, since you are somebody who loves history and government. I like to give an analogy that, unfortunately, at some point we've hit in the tech ecosystem in Africa. We've hit what I call our Berlin conference moment. You remember Berlin conference where Africa was divided into pieces, divided? That's where we are at.
Yeah. No, I think we're past that, actually. I would argue we're past that. I would say this. Yeah, we're past that because...
there's no more hope, or we're past that we are turning around?
We're past that in the sense that we have now gotten to the point where we will have to seek independence, whether we like it or not. we were already, so because what has happened is, over the last, let's just call it 5 to 7 years, right? Foreign investors were very happy to put money into Africa, right? They were happy to invest.
We were talking about the Berlin moment.
Yes. And I was saying we're past that Berlin moment. I think we were divvied up in 2017, 2018, 2019.
Yeah.
that was it. And what's good about it is now a new fund cycle has started. So 2020, a new fund cycle has started, new players. The largest fund on the continent is African fund, and I put that in quotes, is a French, is a Parisian VC. You know what I mean? And the truth is, it is what it is, right? Because the capital is coming from them. But now with capital being what it is, the reality of what is going to happen next is that we're going to have to come up with innovative ways of funding our startups, because nobody's coming to fund the next set. Everybody's gingerly waiting to see what happens with this $1 billion that has been pushed into the market over the last 3-4 years.
Absolutely.
Before they decide what to do next.
So I'll tell you one of the things that at least happening in Eastern and Southern Africa.
Yeah.
Increasingly, I'm seeing local companies stepping up.
Yeah.
And saying, no. What is this tech ecosystem that we seem to have missed the boat on?
Exactly.
So I sit on the board of All Mutual Investment Group, which is asset manager of the larger All Mutual in Southern Africa. And one of the things our group MD has been keen on. So I joined this group 1.5 years ago. So in my first board meeting, I started hearing something called, in investment terms, AI. So the first thing is like, oh, these guys are interesting. They are talking about artificial intelligence in board meetings. Little did I know that AI actually meant alternative investments.
Wow.
So as far as the investment asset management industry in this part of the world, alternative investments included venture funding. And so I became one of the biggest proponents of this conversation. And as we speak, the vehicle for venture for alternative investments in All Mutual Investment Group in Eastern Africa is ready. And one of the title investors is a pension fund. Is actually a national public pension fund. I'm like, it's I'm a Muslim, but this is where I say it's a come to Jesus moment.
Yes.
And I'm like, this is the way we should be going. And after 1.5 years sitting on the board of All Mutual in Southern Africa, the headquarters of All Mutual Group, have a corporate venture corporation called Next 176. And Next 176 was seeded by All Mutual to the tune of $20 million and another $20 million this year. And their focus is mainly African tech startups. So the mood and the conversation is starting to change.
It's starting to change.
And it's really great, Aboyeji, to see you, in the forefront of this, because you've been in the trenches building startups.
We have no choice. We have no choice. I'm very encouraged to hear that, because I think that the participation of local, there are three things that I think are necessary for a thriving ecosystem. For us to expand the social infrastructure this time far ahead of the continent's capacity to capture startup opportunity. Because if you don't do that, then you end up with where we're coming from, which is not a very good place.
I agree.
I think the first thing is we need to figure out how can we help our companies grow profitably?
Yes.
Right? Faster than inflation.
Yes.
The second, and typically that would happen through partnerships with old enterprises that need to be made more productive through investments in innovation.
I love that thinking. We are in complete alignment.
Yeah. The second issue is going to be exits.
Yes.
And likely through local stock exchanges and local 100%. M&A. Right? 100%. This idea that Amazon is going to show up and swoop one of our companies is just an idea.
Look, I keep on saying that Africa's economy is unfortunately not a rounding error in Amazon's balance sheet. They don't care.
They don't care.
They don't care. So we've got to make the cake big enough for people to start taking serious interest, as opposed to it being a corporate social responsibility conversation. I'm sorry, but we don't need that nonsense.
We don't need it. No, you're right. So that's the second thing. And then the third thing is we got to figure out how to build infrastructure, digital and physical infrastructure, to engage talent at scale. And that means there was only one place you can go to for that, which is the university.
100%.
So
100%.
Those are the three checkboxes that we have to tick over the next 10 years. Now, my own effort is really just, I'm hoping with this accelerator, we have an opportunity to sort of rebuild that pipeline, that broken pipeline of companies, so that, the at the very least, the train doesn't stop, the torch doesn't stop flying, Because if we don't get, at least one, Andela Flutterwave type outcome every 3 years, we're in soup. We've set that expectation with global investors, both local and global investors.
Correct.
And everybody's just waiting to see if that's going to happen. What next? If all these companies that have gone and raised $1 billion plus end up not being able to find pipeline to invest in,
then we are cooked.
Fully cooked.
We're cooked. Yeah, cooked.
So that's where my own intervention comes from. I just felt there's important for somebody to go make the sacrifices if necessary to rebuild the pipeline for the ecosystem.
I hear you. Look, I know we are almost coming to the end of this conversation, and I'm cognizant of your time. But I would maybe just to sort of close off, what advice would you give to tech ecosystem founders and investors in Africa?
Yeah. So I say we need to, as an ecosystem, bring things down to first principles. And what are the first principles? Number one, how is technology of value to society? Forget the profit, forget the numbers. Because, look, if it's about profit and numbers, then you know what? All of us should enter Congo and start farming whatever metals.
150%. 150%.
We don't need to waste our time on this technology.
No, we don't. We don't.
Yeah.
We don't.
So
we don't.
It can't just be about profit and loss. We need to now start having a real conversation about value, society. What is society benefiting from technology?
I like that.
The other thing is, we now have to ask real questions, in particular about productivity and jobs. Right? How are we improving the productivity of the so-called old firms in our countries?
Yes.
Right? We cannot live in countries...
as I call them.
Incumbents, as you might want to call them, you know? We cannot have a society where, you know, power is difficult to come by. Then we say we're building startups.
I mean,
startups to solve whose problems? If you cannot solve a problem of power, what other problem
water,
can you solve?
Basic necessities.
Water. If you cannot solve those problems,
food.
Whose problems are you trying to solve? You know,
power.
So
water, food. I mean, Africa has 60% of the world's available arable land, and yet it takes a small country like Ukraine to go into war and prices
go up so much.
Double. I mean, what nonsense is that? We have to really start asking ourselves some hard questions. 100% agree with you, Aboyeji.
We need to have a broader view of technology and target our technology and innovation efforts towards solving our more basic productivity challenges. We have to, right? And that means a broader mindset about hardware, a broader mindset about software, like that. And then finally, the question of jobs.
Yeah.
Whether we like it or not, if technology does not deliver on the promise of jobs, it becomes the hangman for the politicians and the labor unions.
I mean, I'm sure you have followed the story in Kenya about Gen Zs. We are getting to the basics. It's the basics, no jobs.
Yeah,
you know,
no jobs.
People have gone to university, have learned, now they are on the streets. This is what is happening.
Yeah. And in a continent that requires exports dollars, because at the end of the day, that is what is at stake here. What is happening here is we no longer have the export volumes that the world is looking for.
And we are net importers.
Our net importers. So if we can export services, because most of our societies are also no longer agrarian as they used to be.
Yes.
Right? We are more than 50% of our economies are services. They're based on trade services.
Correct.
Right?
Urban areas.
Right? They're doing office work. So unless we can figure out a way to make office work more productive to do, which means how can we leverage that office work to pay in dollars, right? So that we have some imports, some export proceeds coming in. It won't work. So unless we can export services, my advice is really, let's focus on these very basic things. Let's focus on how do we build businesses that create value for society. Let's focus on how do we build businesses that are productive in and of themselves. They actually add productive value, productive engagement to the society. And then how do we ensure that our countries can earn foreign exchange through the services of our young people so we can create jobs and lower restiveness? If we cannot, as a community, solve those problems for our countries, then we don't have a right to exist.
We are cooked, basically.
Yeah, we don't have a right to exist. We're just as bad as the others that we claim we're not like.
100%.
You know, we're just another extractive industry that's just here to take. There's no reason why government should give us more investment. We always cry, oh, government should give us more investment.
Yes.
They should give us favorable policy. And the question I'm always asking is, government, you don't have a right over other businesses to be successful as a tech entrepreneur.
No.
You're not special.
Yep. You're not.
You're not. So except we can
you must pay your way. You must pay your way.
Yeah. So if you cannot define and deliver on your value to society, there's no reason for these concessions to be requested. It's morally unjust. So that's my advice to the ecosystem.
Yeah. Those are profound ideas, Aboyeji. Profound.
Yeah. Let us now go back to the beginning and think about societal value. I mean, when you think about the beginning of iHub, you think about what was done with I forget the name of the software again. That was used to find people during the 2008 crisis.
Yes. How can I forget it?
Ushahidi. Right? That was the beginning.
Yes.
In Lagos, we built budgets, right? To help people keep their government accountable on government spending.
Yes.
We have to go back to that ethos. Perhaps now with more commercial trust. You understand what I'm saying? But back to those first principles 100%. Of how is technology able to add value to society first?
Well, I think this is probably one of the best ways to come to a conclusion of this super, super interesting conversation, Aboyeji. First principle. If we can't get back to the basics, then we have no business existing. My brother, it has been great talking to you. Please do let me know when you're next in Nairobi. I take you to my.
It won't be long. It won't be long.
To my favorite biryani place.
Fantastic! You got me already. Now I'm looking forward to it.
Take care, my brother, and thank you so much.
Problem.
It has been a pleasure talking to you.
Same.
Take care.